Okay, so we've got a really interesting topic to dive into today.
Yeah, looking forward to it.
We've got a bunch of articles kind of looking at this trend of people, ditching Wall Street to become entrepreneurs right here in New York.
Yeah.
And what's really interesting is we've got these articles highlighting some pretty impressive people who've made this jump across all different kinds of industries. So I think for this deep dive, our mission is really twofold.
Okay.
First, what is motivating this whole shift?
Yeah, what's going on?
Right, what's
the push and pull?
Yeah, exactly, the push and the pull.
Yeah.
And then secondly, and I think crucially for the people listening,
Absolutely.
can we uncover the key ways that a finance background can actually be a launch pad for entrepreneurial success?
Yeah, I think there's a perception that those are very different worlds.
Totally, and maybe they are, maybe they aren't. We're going to find out.
And maybe they're more connected than we think.
Yeah, and I think we're going to find some really surprising insights here.
I think so, too.
So to kick things off, let's talk about this whole exodus from finance.
Okay.
What is it about Wall Street that's making these seasoned finance professionals walk away from, seemingly secure, well-compensated careers?
Yeah. I mean, you'd think people would want to stay.
You would think.
But there are these articles you sent me are talking about.
Yeah.
This intense pressure cooker environment.
Oh, yeah.
Right? You've got the notoriously long hours.
Right.
Unpredictable hours.
Oh, absolutely.
And then you just have that very real risk of burnout.
Right.
I mean, the demands of high finance, they can really take their toll.
Yeah. I mean, we've all heard the stories about, the all-nighters and the weekends.
Absolutely.
And it's no surprise that people are looking for something a little bit more sustainable.
Often with a bit more balance.
Yeah, exactly.
Yeah.
So we've got the push factors, things kind of pushing people out of Wall Street.
Right.
But what about the pull factors?
Yeah, what's attracting them?
What is so appealing about entrepreneurship that you're willing to walk away from this, big paycheck?
And, that established career path?
Exactly.
Well, one of the biggest things that came up again and again in these articles was this idea of creative freedom.
Oh, okay.
Being your own boss.
Yes.
Building something from the ground up based on your own vision.
Yeah, having that autonomy.
Yeah, exactly.
Yeah.
And along with that comes, a greater sense of control over their time.
Oh, yeah. You're not answering to anybody.
Right. You're setting your own schedule.
Right.
You're deciding when and how you work.
Yeah. I mean, that's got to be appealing to a lot of people.
Absolutely. Especially coming from such a demanding environment.
Right.
And then, another thing that came up was this idea that a lot of these folks are recognizing underserved needs.
Oh, interesting.
Or untapped potential in other sectors.
Okay.
So they're kind of looking outside of finance and they're thinking, I could leverage my skills in a new way.
Oh, that's really cool.
In an innovative way that I couldn't if I stayed in this traditional financial institution.
So it's not that they're abandoning their capabilities, it's that they're finding new ways to use them.
Exactly. They're taking what they've learned and they're applying it in a new context.
I love that.
Yeah.
Okay, so now we're getting to something really interesting.
Okay.
The unexpected advantages that these folks are bringing to the table.
Right.
Because it's not just about funding, right?
No, not at all.
Yeah.
I mean, sure, capital connections can be helpful.
Yeah, you'd think that would be it, right?
You might think that.
Yeah.
But these individuals, they have other things going for them.
Okay. Like what?
Well, think about the skills they've developed over years of working in finance.
Mm-hmm.
They've got these rigorously developed analytical skills. They've been dissecting complex financial data. They have a deep understanding of risk management.
Okay.
And these are incredibly valuable assets in the entrepreneurial world.
Because it's a risky world.
It's a chaotic world.
Yeah.
You've got to be able to identify opportunities,
right,
assess the potential downsides.
Right.
And they have the training to do that with a level of rigor that most people just don't have.
So that's a huge advantage.
Absolutely.
Hey.
It gives them a real competitive edge.
Oh, okay. So let's get into some specifics here.
Let's see these advantages in action.
Yeah, because you sent over this article
Yeah.
that highlights some really impressive New York entrepreneurs who made this exact transition. And I think the first one that we should talk about is Shake Shack.
Shake Shack. Yeah, that's a good one.
Now, Danny Meyer, his background is in hospitality.
Right. He's the restaurateur.
Exactly.
Yeah.
But the CEO, Randy Grudy,
Right.
he's got this finance background.
He does. He worked at Credit Suisse
That's right.
before joining Danny Meyer's group. And eventually leading Shake Shack.
Yeah, and it's just so interesting to think about how his time at Credit Suisse might have informed Shake Shack's trajectory.
It's a fascinating question.
Because you're taking this one hot dog stand.
Right, in Madison Square.
And Madison Square Park.
Yeah.
And turning it into a global brand.
Global brand.
Worth over $1 billion.
That's a huge leap.
That's insane.
Yeah.
And that kind of expansion,
right.
demands, really strategic financial planning.
Absolutely.
Flawless execution.
You can't just wing it.
No, you can't.
You got to have that financial discipline.
So you think that that finance background really instilled?
I think it must have.
Yeah.
That rigorous approach to tracking their key performance indicators, really analyzing those margins, identifying and eliminating inefficiencies early on.
Right.
That's something that's not always inherent in a business that's just focused on hospitality.
Right. It's about more than just serving a great burger. Exactly.
It's about building a solid financial foundation from the ground up.
Okay, so what were some of the specific things that Randy Grudy would have had to navigate?
Oh, I mean, so many things.
Yeah.
You've got your intricate supply chain logistics.
Right.
How do you get all those ingredients to all those locations?
Yeah.
You've got secure capital for international expansion.
Right.
That's not easy.
No.
And then you've got to manage the financial risks.
Oh, yeah.
That come with such rapid growth.
Because there are a lot.
Absolutely. I mean, his experience in finance would give him a really strong framework for interpreting financial statements.
Okay.
For managing debt strategically.
Right.
And for making those really crucial investment decisions.
Right.
Those are all things that are essential for scaling a business like that.
To that level, yeah.
Yeah.
Okay, I want to move on to another great success story.
Wait, which one?
Warby Parker.
Ah, Warby Parker, yes.
This one seems even more directly linked to the finance world. Yeah.
With Dave Gilboa's background.
Right. He's got that investment firm background.
He worked at Bain & Co.
Bain & Co.
Before co-founding Warby Parker.
Yeah, with Neil Blumenthal.
Yeah. And it all started at Wharton Business School.
Wharton, that's right.
It's such a classic entrepreneurial story.
It is.
They identified this huge market inefficiency.
Yeah, the crazy prices of eyeglasses.
Exactly.
Because there was limited competition.
Right.
And they decided to disrupt it.
And disrupt it, they did.
They did.
They basically challenged monopoly by offering these stylish, high-quality glasses directly to consumers online at a fraction of the cost.
Cutting out the middleman.
Yeah.
Yeah.
And we're talking about a completely different industry.
Right. Totally different from high finance.
Than high finance.
Yeah.
But their financial acumen, their strategic thinking was still so crucial.
Absolutely.
So what specific skills do you think transferred over? Well, for starters, their ability to build that direct-to-consumer model.
Right, yeah.
Cutting out the middleman. That required a deep understanding of the supply chain, the logistics, the inventory management.
And that's all financial.
It's all financial.
Yeah.
Managing inventory for a retailer, that's huge. And then, of course, they had to secure funding to fuel their growth. And they managed to achieve $1 billion valuation.
Yeah.
I mean, that's incredible.
So Gilboa's background must have been so helpful.
Oh, I'm sure it was.
Yeah.
He would have had the analytical tools to assess the market, to develop a really solid business plan, and to communicate their vision to investors.
Yeah.
I mean, that's key.
Absolutely.
Yeah.
Okay, so then we have Sweetgreen.
Sweetgreen.
Which is another fascinating story.
It is.
Now, the article mentions that the founders weren't strictly from Wall Street, but they did have finance backgrounds from Georgetown.
They did, yeah.
So how do you think that influenced their journey?
Well, I think it gave them this really strong foundational understanding of some key things, like fundraising, market research, and even supply chain economics, which is really important when you're dealing with perishable goods.
Yeah, because that has a huge financial impact.
It does.
Yeah.
If you're not managing your supply chain well, you're losing money.
Right.
And they were able to take this relatively simple concept.
Yeah, I mean, it's salad.
It's salad.
Right.
But they turned it into a publicly traded company, valued at over $1.5 billion.
It's insane to think about a salad chain reaching that kind of valuation.
It really highlights how important those fundamental business principles are.
Yeah.
And a lot of those principles are rooted in finance.
Right.
So they weren't just passionate about healthy food.
Right.
They also understood the financial side of the business.
Yeah, they knew how to make it work.
They knew how to scale it.
Yeah.
How to attract investment.
It's amazing.
Yeah.
Okay, so the article also touches on this broader trend.
Okay.
Of Wall Street professionals moving into commercial real estate.
Yeah, that's a popular move.
It is.
Makes sense.
Yeah, and it feels like a more direct application of their skills.
Yeah.
So why do you think that is?
Well, I think it's because the fundamental skills they learned in finance, things like financial modeling, structuring deals, conducting market analysis, those are all directly applicable to real estate. Right. You know, understanding property valuation, securing financing, navigating complex transactions. Right. These are all things that they already know how to do.
So they've got this built-in advantage.
They do.
Yeah.
And the article highlights Michael Shvo.
Oh, yeah.
It's a prime example.
Yeah.
He's a former broker who became a big-time real estate developer.
Yeah, right here in New York.
Right here in New York.
And it seems like he really leveraged his finance connections.
He did.
To get there.
Yeah. I mean, his story is a great illustration.
Of what?
Of how valuable those high-level networks are. Right. And how important it is to understand high-stakes deal-making. Yeah. You know, his ability to connect with investors. Right. To structure those big development projects. That probably comes directly from his time in finance. Right. Yeah.
So we've talked about a lot of different examples, a lot of different people who've made this transition.
Right.
But I think it would be helpful to kind of zoom out.
Okay.
And think about some key takeaways.
Yeah. What are the big lessons here?
Yeah. What can we learn from these individuals who have gone from Wall Street to building these amazing businesses?
I think one of the most important takeaways is just how widely applicable a finance skill set is. We've seen it in all these different examples.
Yeah, from burgers to eyeglasses.
From burgers to eyeglasses to salad to real estate.
Right.
The things you learn in finance, those core principles. Right. Strategic thinking. Investment analysis. Yeah. Efficient operations. Those are valuable across so many industries.
So it's not a narrow skill set.
Not at all.
It's actually quite broad.
It's surprisingly broad.
Yeah.
Yeah.
And I think another takeaway that came up in pretty much every story we talked about is the importance of leveraging your network.
Oh, absolutely.
And I know that might seem obvious.
Right.
But how crucial was it for these entrepreneurs?
I mean, it was everything.
Yeah.
Especially in the early stages.
Yeah.
They tapped into their Wall Street connections to get funding, to get advice, to find mentors, investors who really understood their vision.
Yeah.
So don't underestimate the power of your network.
That's great advice.
Yeah.
And then another theme that I noticed was scalability.
Scalability, yeah, that's a big one.
It came up with Shake Shack, Warby Parker Sweetgreen.
Yeah.
Why is that so important?
Well, because scalability is really what separates a successful high-growth business from a smaller lifestyle business.
Okay.
You know, it's the ability to replicate your model.
Right.
To expand your operations, to reach a bigger market.
Right.
That's how you achieve significant growth.
Yeah.
And that's how you attract more investment.
So are you saying that these entrepreneurs were thinking about scalability from the very beginning?
I think they must have been.
Yeah.
I mean, you look at Shake Shack going from one kiosk to a global chain.
Right.
Warby Parker with their nationwide direct-to-consumer model.
Yeah.
Sweetgreen expanding across multiple states. They were all building businesses that could grow.
That could scale.
Exactly.
Yeah. It's also interesting to contrast the approach of these finance entrepreneurs.
Okay. With the, move fast and break things mentality.
Right.
That we often associate with Silicon Valley.
Yeah, that's a good point.
And I know that the article you sent kind of touched on this.
Yeah.
But do you think there's a difference in their risk tolerance?
I think there's a difference in their approach to risk.
Okay.
These finance professionals, they've been trained to manage risk.
Right.
They're not afraid of it.
Right.
But they're very calculated. They assess the downsides. They try to mitigate them.
Right.
And that can lead to more sustainable growth.
Right. It's a more measured approach.
It's a more disciplined approach.
Yeah.
Yeah.
So looking ahead, do you think this trend of Wall Street folks becoming entrepreneurs is going to continue?
I think it's going to accelerate.
Why is that?
Well, I think there are a few reasons.
Okay.
First, the nature of finance jobs is changing.
How so?
Well, you've got more automation.
Right.
Some tasks are being taken over by machines.
And I think that's loaning some people to rethink their career paths.
Okay.
At the same time.
Yeah.
It's becoming easier to start a business.
Right.
You've got more resources available, more mentors, more tools.
Right.
So it's not as daunting as it used to be.
So you're saying that the barriers to entry are lower.
They are.
Yeah.
And that's creating this perfect storm for people with financial acumen.
Right.
To say, hey, maybe I can do this myself.
Yeah, I love that.
Yeah.
So to wrap things up, I think it's really cool to think about how, you know, the next big thing in New York City, the next company that really captures our attention could be founded by someone who left Wall Street.
It's very possible.
Yeah. I mean, that's pretty amazing to think about.
It is.
And I think what these stories really illustrate is that you can take your skills from one industry and apply them in a completely different field.
In a new and innovative way.
Exactly. And potentially create something really impactful.
Absolutely.
So, as we've been talking about all this, I hope you've had some of those aha moments.
I hope so.
That we promised at the beginning, you know, where you realize that the things you've learned can be applied in ways that you might not have imagined.
That's the exciting part.
It is.
Yeah.
So just to kind of leave everyone with a final thought.
Okay.
You know, we've talked about all these different skills, experiences that have led to success.
Yeah.
But what about your own skills?
What about them?
And experiences? Where could they lead you?
I mean, that's the question, isn't it?
It is.
You know what? Seemingly unrelated things.
Yeah.
Can you connect to create something new?
Right.
To achieve something remarkable.
I love that.
Yeah. I mean, think about your own journey. What unique blend of skills and experiences do you have?
Right.
And how could you use them to make a difference?
It's such a good question.
It is.
I think that's a great place to leave it.
I think so, too.
Okay.
Thanks for having me.
Thanks for joining me.